Hello, and welcome to our first episode of Deal Hunter, where we follow the smart money. I'm your co-host, Mitch Flax, founder and CEO of Net Equity Capital, where we create wealth through direct real estate investments. My co-host, Thomas Staub, welcome.
Hello, sir. How you doing?
We're doing quite well. Good to see you.
Yeah, likewise.
Well, tell us a little bit about yourself, Thomas.
Yeah. So again, as Mitch mentioned, this is a weekly thing, right? And I think we generally saw an opportunity to get people in the market involved in these smart money deals, as I'll call it, right? What I've been doing though for the last 12 years of my life is all sorts of real estate endeavors, and I think a lot of real estate investors start out someone on the smaller end doing single family homes and flips, and then they find themselves in syndications and then commercial buildings, and the journey goes on and on and on, right? Well, that journey has led me in the last several years to land development. Initially in Arizona, where we bought 80 acres, doing single family build outs, a resort to cater to the glamping, booming segment of glamping. And over now to Texas near Austin, which is just recently Disney announced their relocation to there as well of 8,000 acres, a third park. So we're doubling down in Austin. And today, the deal we'll talk about is a land development deal in Southeast Austin, the nation's home of barbecue.
The barbecue capital of Texas,
That's
Lockhart.
Right. That's right.
Just located about 20 minutes southeast of Austin.
That's right.
Yeah, talk to us a little bit about this deal. Tell me, why land and why Lockhart?
Yeah, so if you're not really familiar with real estate, then you wouldn't have seen the headlines about the booming, almost housing crisis. And really the crisis comes on the supply side, right? Plenty of pent up demand. If you look at builders, for example, their orders across the board, 40% of the orders for homes is in their backlog. Huge amount of demand for houses still remain, right? And if you read some reports recently by John Burns and a few others, that demand is going to be here for some time, right? At least through 2023. The problem with builders, there's a few things. One, we know there has been price increases, inflation on materials, that being copper, PVC piping, garage doors. Lumber was a big thing in the headlines. Lumber was only actually number 4 or 5 in terms of the highest price increases on all the materials, right? So long story there, number one, material and supply issues driven by supply chain constraints. 2, back in 2008, there was about 13 million contractors in the market. The crash happened and we lost about 20% of that, right? So we have about 10.5 million workers today with a demand of 14 to 15 million needed. What does that do? It puts constraints on projects. It increases wages for laborers. Now in Texas, we don't really have that problem as much, but if you go to Ohio, Northeast, Midwest, major problems with subcontractors, right? So number 2, getting the labor and resources. And then number 3, arguably one of the most important ones is land, the scarcity of usable land, right? Developers right now have a 2-to-1 ratio of demand versus supply of land. And oh, by the way, there's a 20% year over year growth in planned communities for these builders. Keep in mind, they're all, at least the big 4 are publicly traded. They have to have these growth numbers and earnings, and they don't get there without the land to build on. So
when you say the big 4,
you're
referring to
D.R. Horton, Toll Brothers, Lennar, KB Homes.
Thank you.
Yep. And so if you look underneath the carpet or the rug, if you will, in the real estate market, what you find is that the smart money, the big investors that I know and work with, and there's a few areas that they're investing, obviously multifamily and syndications and commercial in certain segments, but also land deals. They know there's a need right now for these developers or these builders to pick up land. In fact, it's to a point where I can call builders on my list of 31 builders. Just yesterday, I had, I'll talk about it. It's a company called Highland Homes. I don't think they would mind. And we're working on agreements pre-committed on lots, right? So before I even have land, they're talking about buying lots from me in these certain areas at a predetermined price, right? So the demand is really strong. So the deal today is basically a deal where we acquired the land, right? We put in a large amount of money to develop the utilities, right? Water, gas, sewer, internet, all that.
What does that actually entail when you go out and you get this builder ready, as they call that?
Yep.
What does that actually entail?
Yeah. So depending where you develop, it takes about 6 to 8 months in Texas for a bigger property to get the surveys completed, engineering, permits, city approval, and all of that, right? Compare that to, let's say, California, which is about 3 years, right? So even in Arizona, we're at 9 to 12 months. So Texas, particularly around the Austin area, super fast to get these approvals, right? And timing is everything on these deals. So it takes a lot of engineering. For ballpark math, the entitlements, as it's called, is roughly 10% of the development cost, right? So if you spend $10 million in development cost, you can plan on about $1 million of engineering and permit fees and city fees and all that.
Right.
Okay.
So you guys found the land. How did you find this deal in the first place?
Yeah. So a little note to everyone out there: typically speaking, if you see a deal on the MLS or on, CREXI or LoopNet, and it's for land, it's probably not a good deal. There's so many sharks in the water right now that it has to be off market. So we have people in a variety of ways that talk to local landowners that deal with off market deals, essentially big wholesalers that go out there and find these chunks of land.
So when you found this land to go out and develop, ultimately, you look at what the Austin Round Rock MSA, which is one of the fastest growing in the country, right? Experiencing record levels of low inventory, high demand, a surge in purchase price. Regardless of where you live, you've probably noticed your purchase price and that high demand skyrocketing. Why Lockhart though? Why when you look at the total MSA in the Austin Round Rock area, what is it about Lockhart that attracted you?
Yeah, it's a great question, right? What is the viability of the area? And there's a guy named Neil Bawa who does massive multifamily syndications. I mentioned his name because he measures metros in terms of their viability in a very similar manner than I do. And Neil Bawa's track record is phenomenal, right? Now he has a 10 variable algorithm. I have a 27 variable algorithm, right? So I pull in things like school ratings, crime ratings, median income growth, GDP growth of the local economy. But the three that really matter is, what is the growth of median income? Obviously, higher income growth means higher affordability, which means better prices on homes. 2, population. Keep in mind, so real estate's all supply and demand, right? So is there increasing population in the area? Lockhart has a booming population growth rate, 15, 16% year over year. That's 15 times faster than the national average. And then 3, is the local economy growing, GDP, right? Lockhart has all these variables in their or at their back. And of course, Austin is sort of creating that halo effect to Lockhart, right? But the other piece that's really important, I think this will be a big trend going forward. As you see material costs go up, you're seeing developers build essentially crappier homes at lower price points. They want to really hit that market of 275 to $500,000. That's where the biggest bucket of buyers are. And even if we have a market crash, they know if they play in that arena, they'll be safe, right? So they're starting to slow down in their luxury a bit and then shift towards these higher density, I guess call it cheaper homes, if you will. So this opportunity is that exact sort of product. It's going to be lots built for homes around the 300, 350 range.
So one of the things that I know about Lockhart, there's a large amount of Austin creatives and restaurateurs who are actually already relocating. I certainly think that creates buzz, but when we look at the fundamentals of Lockhart, you've got a new 75-acre industrial park. You've got proximity to GM, Peterbilt, Toyota, the new Tesla, all assembly plants. And I got to think that's going to create additional housing demand, especially in this market segment, that demographic is going to need housing. They're going to need affordable housing, and it's certainly more affordable than other parts of the country.
Yep. Yeah, no, I think you're spot on, right? I mean, there's a long list, and I think we've seen it in the news of all the big HQs coming to Austin, right? All around Austin. I mean, Southeast, you have the Oracle build out too, right? We forget about that. And the multi-billion-dollar build out of East Riverside, which is going to be, if you know Austin at all, go up north, there's an area near Apple called the Domain, right? Massive retail commercial center. East Riverside is going to be 2 to 3 times that, right? And that's going to go all the way down to the airport, plus the high-speed rail. I mean, Lockhart is set up wonderfully, right? If you go just left of Lockhart, everyone's talking about Buda now and Kyle, right? Well, look at what those are today. They're homes that are selling for $500,000 and above. Lockhart's next. So we're getting in now while the land's cheap to try to capitalize on this opportunity.
Yeah, and I certainly think when you look at the inventory levels in Caldwell County, where Lockhart is, it's already dropped from 2.5 months to 1 month of supply. So yep. I think the word is getting out there. Certainly a great area. I think probably the most economical area as I look at the MSAs, where you look at possible overpriced, overdevelopment in Round Rock, Pflugerville, Georgetown, those areas that are experiencing those same growth rates. I don't know if Lockhart has really kind of gone through this massive gold rush to real estate quite yet. So your timing could be impeccable. So talk to us a little bit about the deal economics. When what can investors expect in a form of return, and when can they get their money back?
Yeah, so it's a great question. And first, I think you're right. If we had all the cash in the world, right, I think I would just buy this land and hold it for 5 years, because I truly do think these valuations are going to go up 2 to 3x over the next 5 years. We're looking at more of a 2 to 3 year plan, right? So we'll still capture some of that upside on the appreciation, but the numbers are good enough to just take it down now. So at a high level, there's a few ways to look at this, and I'll run some numbers here, and I know it's a lot. Basically, in the market today, you are looking at a per acre cost. All right. And we picked up 89 acres at $45,000 per acre. Okay. That's just over $4 million in a total purchase price. For comparison, I just got a deal yesterday up in an area called Belton. I do like Belton. It's about an hour north of Austin, not growing as fast. Price points are a little lower on homes. They're now selling something very similar for $60,000 an acre. So I think we're already to the upside of, almost 30%, give or take.
Now, right? When you're saying selling $60,000 per acre, are we talking about, and I think this is important in land development, something that I actually learned from you, is this land that is covered by, sewer water, or is this septic?
Great question. Yeah. So one of the biggest expenses in this entire, in any land development deal is sewer, right? Water, power, but sewer is a big one. If you can find a land with sewer, you're sitting on a gold mine, because it allows you to build out higher density neighborhoods, right? So for example, on 1 acre with sewer, I can build 5, 6 homes or lots, right? Well, if it doesn't have sewer and you have to use septic, most counties around here require 1 acre lots, right? So an 89 acre plot of land, I might get 80 homes with septic, but we get 450 lots on this one with city sewer. So to your question, it's an apples to apples comparison, sewer to sewer, almost the exact sort of road frontage and shape and everything, with our price point being 45,000 an acre versus 60. So I do think already we're sitting on over $1 million of equity already. So
phenomenal.
Yeah, so that's the purchase price, $4 million. We're doing we have secured debt now at $3 million. Now, we're factoring in like a $5.8 million raise all in, but that's part debt, part equity. Our equity raise is $3 million. We're trying to oversubscribe just to be safe. And we have about 1.8 million committed today, right? So this does close though in the next 2 weeks in terms of our window to get that capital in.
So you're looking at a close date of when, mid to late August? Is there a specific date that?
Yeah, we're looking to get all commitments in on paper by probably the 17th, 18th of August, funding by the 23rd, and then closes the 31st.
And so as far as the overall return profile on this, what does this look like for an investor? I've got $100,000. I'm going to give you $100,000. What does that return profile look like? When am I going to get paid?
Yep. Yeah, sure. So typically in land deals, there's a number of ways that you see this in the market. The most common that I hear about from my partners and whatnot is a preferred annual return. Okay. So again, every year you get paid a pre-negotiated return on your money. Typically you're looking at 20 to 30%. That's the range, right? 23, 25 is kind of the average. This deal is coming in at 27% preferred return annually. So for $100,000 in an investment, you get $27,000 per year that your capital is in the project. Now, our term is 2 years. So on that investment, you would expect a $54,000 return over 2 years, right? Again, paid annually, $27,000. But as I was telling you, our goal is to pay off this as soon as possible, right? And we're targeting around 18 months when we sell the first 100 lots. Now, we do that because if you think about it, you as an investor, that's your return, but that's our cost, right? So we're trying to pay our highest cost off as soon as possible and pay back the investors their principal and returns.
So the numbers certainly make sense as far as the risk and the return profile. Let me ask you this from a tax perspective, and nobody here is a tax expert and certified to give tax advice or tax counseling. But when it comes to K1, is that income going to be treated as return of capital?
Yeah. So the way it works is, and again, this is a great question. And I encourage all my clients and investors to think about the exit before the exit, right? Tax planning, whether you do trust or some sort of entity structuring, all that really matters, right? Which is why we put you in touch with our teams to get that planned out. But long story short is the first 12 months would be a hold period, right? So you won't have any gains through this 2021 year, which is nice. In fact, you'll receive a K1, which is basically is part ownership in a company, and you'll have a slight tax write-off going into into January of next year for your taxes. And if we do it right, you'll have a small gain in 2022 with your 27%, but we give investors the option to push back the returns into later years if they need to, right? Again, this is a little creativity, but if you have tax hits, let's say you have a huge windfall coming in 2022, we can strategize to push those gains into the last year to help you hedge against tax risk.
That's great. Let me ask you this, because I'm more familiar where there's an actual depreciating asset. My prior experience has been in, the multifamily student housing space. And typically on those K1s, you've got accelerated depreciation on the hard asset, the building itself. How does land work with depreciation? Because from what I understand, there's really not much you can do until something's built on there.
Yeah, and this is a little more complicated than your typical real estate deal, right? Real estate, you get your scheduled depreciation, you take that against your income. Pretty simple. This one, because it's considered land improvements, the depreciation is not as favorable, but we will still have operating losses, right? Like for example, we'll have a $250,000 payroll and operation expenses per year. Those are going to be losses, right? So we're going to have actual active losses through a K1 that you can write off. So it's not so much focusing on depreciation because it is land. It's more focusing on the expenses of the operations that was initially funded by the debt and the equity, right?
Totally makes sense.
Yep.
Excellent.
Yeah.
So let me ask you this. So, let's just say if I'm an investor who is interested in, seeing, perhaps your PPM, I want to learn more about this specific deal. I want to invest in the deal. How can people find you?
100%. Yeah. So if this is on YouTube, we'll put a link down below, and that's where you can get more information. You'll get a 20-page deck that walks you through why Austin, why Lockhart, what's happening, all the numbers, how we're going to strategize this, what the exit plan is. So you'll see all that, right? The site plan, the location. So you'll get that. If you're interested, most people want to talk to me one-on-one. That's totally fine. There's a link to do that. You can schedule a call with me personally. We go over that process. And then if you're interested, you do a commitment. We put you in a formal 506B document, which is just saying, hey, this is what you commit to. Here are the risks. You sign off on that. And then it's off to the races. And then what's really important too is once the deal closes, it's how we communicate. And I find that if we give quarterly updates on the projects with a complete open office, and what I mean is if you have questions beyond that quarterly update, 100% give me a ring. I'll let you know what's going on, right? But transparency is really key in these deals to build trust and let people know what's happening. What are the hurdles? What are the wins? And how we get this off the ground and running. So.
Well, I'm excited for you. I think this is an outstanding deal for the right investor. Obviously, we want to help investors through the course of having these episodes to really help understand these deals in more thorough detail, ask the right questions, and then ultimately really give them analytical tools, things that I've learned, things that you've learned over the course of us having these episodes and dealing with new sponsors who we're familiar with. Some we may not be familiar with, but we really want to help educate investors, folks that are just getting started, folks that are seasoned, and even the institutional type folks who might have a listen. And we really want to give them an idea and more clarity on ways to evaluate real estate deals, because sometimes it's not just all about the numbers. Sometimes it's all about the operator who's behind it, and those relationships that exist. So I think that is just as important as any of the numbers you can look at. I'm also available. You can go to my website, netequitycapital.com. You can email me at investors@netequitycapital.com. I'd be happy to talk to you. We're here for you, and we look forward to bringing you more deals in the future. Thomas, any closing words before we sign off?
100%. So this, by the way, for you all out there, this is not our first podcast. Mitch has his own podcast. I have my podcast, and we created this again, just to hit on the money here. We really want to bring you all, rich content, digging deep into these deals. No fluff. You're getting the real stuff here. So I'm excited to see this go off, and we have a once per week, give or take, deal analysis on opportunities, and next week's is even is also exciting. So I'm looking forward to the Irish housing one that we're presenting next week as well.
Hey, by the way, last question we didn't even ask.
Yeah,
what's the deal minimum on this?
Great question. So we have ability to waive, but we're kind of late in the game here. So we're looking at $50,000 is the lowest amount of money that we'll take in.
Okay. Phenomenal. Man, it's been a pleasure. And I'm excited that we got this off the ground. And I look forward to seeing you once a week here.
Love it. All right, y'all. Thank you.
Thank you.